So thank you one and all for joining us here today. We are really excited. We have a lot to share with you. So of course, today what we're going to be talking about is how to account for eKYC in operations and planning and budgeting for 2023. Everyone's excited for 2023 and, let's really get into it. So, I have 15 years of experience. Just joking, this is obviously not me. Jeff had actually fallen quite ill in the past couple of days, so I'll be taking over to do the whole webinar for you guys. No worries. Just a quick introduction of myself. My name is Daniel. I'm the APAC business manager here with TrustStalk. I cover the APAC regions business within TrustStalk's global team. For those who joined our previous webinar, eKYC is a growth enablement tool. We actually hosted a webinar with our partner iProof. So Milko, as you can see, and we both shared a lot about how eKYC is used as growth enablement tool. iProof is one of the technology leading experts and award-winning technologies out there in selfie verifications. So yep, we are really happy here today to share with you another wonderful webinar and really hope within the next 20 minutes or so, you can definitely take back something really useful for your own business. So getting straight into it, first of all, we start with operational planning and efficiency for your eKYC solution. Every requirement for the most basic of eKYC operations, there are these 4 key pillars, and it forms the backbone for your eKYC operation. They will also directly affect and impact the cost or revenue of the business. And I'll get to that towards the later end once we start talking about the budgeting portion. But for now, it is very important for us to touch on these points. So just a little declaration, we won't really be going too in-depth about the compliance aspect of it, but it will definitely be a conversation for another day. For now, our focus is more on the operations and budgeting. So quickly touching on these 4 points, which we'll go into more detail after. ID cards. Every KYC process always starts out with obtaining ID documents of the applicant to tag their identity and nationality too. Secondly, verification for the selfie. Now we have to ensure the applicant is who they're claiming to be, and we have to tag the ID document to that person. Third, completion from the end users. So now, after all the marketing efforts your business has gone through, we finally have an interested customer applying to join your platform or service. Many businesses assume, it is entirely dependent on the customer to complete the process. However, there are actually ways that operationally you can approach to ensure that they complete the application. So more details will be shared. The customer on the 4th, receiving the data on your back end, the customer has finally completed the application. Great. Now we have to look into how you receive and process the data and turn around the application back to the customer, get them into a paying customer and a user for your business to generate revenue and growth. So 4 very simple points, but actually there's really a lot to talk about in every step. Now, going to ID cards and documents. So in every market that you plan to expand to, there's always a complication of, what ID documents do I need or do I want my customer to use to verify their identity? So these are really pretty much checklists for you to really start looking at your business operationally, that what are the types of ID documents? Next, we have different countries, what kind of countries use what documents for verification. For example, different countries have different languages as well, and they process those languages, or do you only process Latin? Thirdly, does this document that you have chosen make sense for your business and operations and compliance as well? So from our experience, for example, if you're a ride sharing service or delivery service, maybe you do need to do KYC for driver's licenses. And of course, in addition to the ID documents and all passports. Lastly, how much time am I spending on researching and understanding what documents are important for my business? So this is very important because it does contribute to the labor hours and manpower, which does contribute to the budgeting and finance portion of it. Just sharing a little bit from our experience, did you know that in Japan, only 19% of the population have passports and 74% of them have driver's licenses. And this is actually the usual go-to document for KYC. This is actually very different outside of Japan, but similar for other countries. The popular ID document could really be anything. Operationally, you have to be able to keep up with the constant new ID documents that are being released on the markets and in the countries. And all of that has to be tailored to your business. So this is for ID documents. Once the ID document portion is settled, next we have the selfie verification. For a business operationally, you do have to check all these things. For those who joined us in our previous webinar, we touched a bit on selfie verification. So with our partner, iProof, operationally, you do have to check. Do you have a solution or process in place that is able to reliably verify the identity of the person's photos in both the ID document and their selfie photo? So you have to check, is this a fake photo? Does the customer need to take the photo manually? How is the quality of the photo that was uploaded? Is it of satisfactory quality? Otherwise, do I need to ask the customer to resend me another photo? And this will cause actually some cumbersome back and forth between both the business and the customer to ultimately get a satisfactory photo from them. From our experience, usually this process itself does have quite a bit of risk for drop-off and cancellation of the KYC process. And all these questions actually sound like it is very dependent on the customer to take the photo. But however, with the right solution, you're actually able to automate this and ensure the quality of the selfie photo is always satisfactory for your back end. Take it off your team's plate in processing the selfie verification. One less step. Next, we have the completion from the end users. So earlier, I mentioned a lot of responsibility lying on the end users to complete the process and submit the information. But however, the customer actually has already a lot of responsibility on their end with so many details to check on their own. So firstly, they have to check if the correct information has been submitted. Does their information match the ID card? Have they uploaded the selfie photo? And why does it keep getting rejected? Or is it they don't know what is considered satisfactory to be processed, right? So how are they going to complete the KYC process to start using your services and products? That's a very important question. Operationally, you do have to check. Do you have the KYC process in place that is so seamless that it enables the customer instead of hindering the customer from using your services? Ultimately, you need to have a process in place that will allow them to reduce or minimize human errors, complete the whole process seamlessly and with a smile. The more seamless it is, the higher chance for completion. That's basically it. We have previous webinars and future content about deeper details on this, but for now, we're going to leave this here, some food for thought on this part. So moving to the last part, which is receiving the back end. So now the customer has already submitted all the information back to you. Now the responsibility falls on you. Are you able to turn around quick enough the whole KYC application back to the customer before they start considering alternatives or substitutions? So for example, if your whole KYC process takes 24 to 72 hours before it is finally approved, what if they consider competitors or substitutions? And what if those alternatives had approved their account even quicker than you have? In our process, clients who actually faced this issue ended up with lower marketing returns on investments and higher customer acquisition costs. So speed is basically of the essence. Operationally, you could ask yourself this: are you going to be that service provider who is faster than everyone else on the market and quickly seize the opportunity for growth? So we have talked to several clients that speed is definitely an advantage, not specifically to make the customer happy, although that is definitely one of the perks, but for them, they use it as a competitive advantage in the business or the industry. So that is something really interesting that is very different from what is really mainstream on the market right now, having that speed in turning around your KYC process. So all in all, we address those 4 factors of operations, and every single one of them are as important as one another, and it contributes to the budgeting and financial planning for eKYC. So rest assured, we will bring it around full circle at the end of the webinar. But for now, allow me to get into the points for budgeting and financial planning. So when it comes to, revenue, cost, and budgeting, there are three key points. One, the direct cost itself or the variable cost per verification. Number two, the amount of customers being onboarded in a year, which is basically the amount of verifications you have to perform per year. Lastly, the average customer lifetime value. So how much does the customer provide your business in terms of revenue throughout their time using your services? We will elaborate more on these 3 points, but before we make sense of what these metrics will mean to your business, so allow me to elaborate on that. So looking at the variable cost itself, the average cost per verification, there are 2 ways that you can really look at it. One is an external vendor and one is an in-house solution or process flow in place. For the external vendor, usually they come with 3 different kind of packages. A variable cost, which is actually the most common option. You just pay per use per verification that you consume. Some, offer a fixed cost of X number of verifications, or maybe some offer a mix of both. It is very easy to factor all of this, the entire package on its own, under one category relating to KYC. But most commonly, is a variable cost. However, when you're starting to get into the in-house process flow or in-house solution, it gets much more complicated. Running a business is actually never easy, of course. And as long as it includes manpower into the equation, there is hiring costs, HR costs, employee morale, employee benefits, training, scalability, many, many more other factors are factored into the equation. So you do have to consider all of that when you're doing an in-house solution. However, the next question comes that, what if you have a growing number of volume? So an in-house solution is definitely plausible for a small volume, but what if you're having 10,000 or even 100,000 verifications required per month? There is nothing wrong with managing a bigger team if you have to, but from our experience, when we talk to plenty of companies that, some of them mention, oh, country X or country Y, does it really cheap or the labor cost there? But you do have to factor in each manpower you add is a fixed cost. It may or may not flex well with the business. And as the business scales, business is not necessarily constant. So usually they end up with 1 or 2 scenarios. Either 1, you're paying too much for the manpower, or 2, the KYC itself, we have a lack of manpower and it is too slow. Either way, it's not the optimal situation to be in, but from our discussions, maybe it is really cheaper if you're really maxing out on what a human will be able to do manually. But from a business perspective and a high-level perspective, you have to consider each manpower hired introduces a fixed cost into your business. And remember that all of these costs for training, HR, etc., you're comparing that to just a variable cost per verification. At the end of the day, you know your business the best. We just want to share that you have to compare between the two and decide on what makes most sense for your business, both financially and operationally. Just as a general rule, just sharing also from some past discussions I personally had, under 500 to 1,000 verifications a month has much less complexity. So usually an in-house solution doesn't really have much difficulty addressing or dealing with it. But anything more than 1,000 a month, that is when you start to get the benefits from outsourcing. So moving on to the next point, which is basically the customer onboarding volume. For this portion, it's not exactly a finance metric, rather a marketing metric. However, this is definitely a metric that the finance team should pay attention to. Usually, this is a reflection of your marketing dollars that is spent. And based on the number of customers, it determines the acquisition cost. So, however, are they really your customers before they complete the KYC process? For example, many e-wallets, they limit the transferable amount to $100 before KYC. Only once you KYC them can they transfer with near unlimited amounts, right? So that is usually starts the whole monetization process and really drives in the profit and revenue for the business. Basically, the true monetization only comes after the KYC is completed and the customer is truly acquired. So this is something really important to take note. So moving on to the next point, which is customer lifetime value. So, there are really two drivers of total revenue. One is monetizing existing customers, and second is increasing the number of customers. But today, we're not really going to discuss about how you monetize your existing customers, because this is entirely up to you. It's your business and you know your industry the best. But where we really want to focus on is how eKYC impacts the increase of new customers, the acquisition of new customers. Regardless of your monetization methods, you can be very sure that as long as you have an increased customer conversion rate and you convert more customers, it will lead to an increase in your total revenue. Every interested customer you don't convert is basically lost revenue. For example, if a customer gives you just $10 of CLV, of customer lifetime value, right? But you don't onboard them due to drop off in the application process, that is $10 that was lost. You make that 100 and that is $1,000. So as you can see, that's how it affects your total revenue. Before I make sense of those metrics for you and really illustrate the entire scenario to you, allow me to touch on these 2 points. We touched on the variable costs earlier. Now we're going to look at the opportunity cost and what this means for your business revenue. Looking at drop-off rates. So this basically refers to the number of applicants that do not complete the KYC process. And we mentioned that quite a few times previously throughout this webinar. These customers end up canceling the whole KYC application as a whole. They could have found a substitution or an alternative, whatever it is. The next is the variable opportunity cost, and here is where it really affects your business profitability. If you had converted and onboarded all your customers without any drop off at all, how much revenue would you have gained? This is the opportunity cost. So allow me to go into more detail on each point. So high drop-off definitely contributes directly to increased customer acquisition costs, thereby increasing your costs and decreasing revenue potential in would-be customers. The trust and reputation of your business might have also been affected, but the even worse still is that many businesses, they actually invest additional costs to attempt to recover these lost customers. So this once again increases the customer acquisition cost as a whole. So as you can see, there are many multiple factors that just cascades down the whole process flow. From our experience, the number one reason why customers are unable or they choose not to complete their KYC process is due to a poor user experience or poor user interface during the KYC process. It causes them unable to complete, or they're just generally unhappy throughout the whole process, and hence they just cancel it altogether. Secondly, the second biggest reason that we've surveyed is, a long waiting time for them to be approved. For example, if it takes 1 to 3 days for them to be approved, they could have discovered a lot of alternatives and substitutes, as I mentioned earlier. Just to highlight, this is particularly dangerous because this customer profile does fall into a portion where they need the service urgently. Hence, the revenue actually honestly need not to be lost at all. They could have been converted and been using your services almost immediately. So the third biggest reason is really the process being too tedious and having a lot of frequent back and forths with the KYC and compliance team to finally verify their identity. It could be due to a number of reasons, poor submissions or poor quality submissions, etc. What we really want to mention is that all these 3 points are not exactly individual points to take into consideration, but they're actually all in a package together. Just for example, a poor user experience or user interface could have led or caused the need for frequent follow-ups, and this results in a longer processing time to finally verify the identity. So that's just an example. But by covering these 3 grounds, you can be sure that it will correlate to a reduction in your drop-off rates. So definitely 3 important points to take note of. And here is where we get to the opportunity cost. How much revenue was actually lost due to the drop-off rates that we mentioned. And this, I hope to be able to illustrate. And we are about to get a little bit more numerical, but I really hope it illustrates very well how a simple drop-off rate causes a huge difference to your profitability. So here we have a very simple case study. For example, the annual customers onboarded within the year is about 100,000. The average cost per verification is $2. Each customer provides about $10 in lifetime value, and this is, quite conservatively speaking. Customer acquisition cost is $2. The drop-off rate is about 20%. So very quickly, what these numbers mean and for the business is the total verification cost, very easy to calculate, $200,000. The total revenue, once again, easy to calculate, 100,000 times $10. The total customer acquisition cost is $200,000. So this portion is easy to make sense of. But where things really start to get personal for the business is when profitability is being affected. So, for example, lost customers of about 20,000. And, you're losing money if you're losing customers. That is pretty much stating obvious. So 100,000 minusing off 20%, you're actually losing 20,000 customers. Losing the revenue, once again, 100,000 times $10 of revenue times 20% causes a lost revenue of $200,000. And lastly, the amount of marketing dollars that was being spent for customer acquisition that was actually wasted due to the drop-off rates through the KYC process. So once again, $100,000 times $2 times 20%. So essentially 40,000 marketing dollars was wasted. If that didn't make sense to you, or it was a little hard to really understand what all of that meant, no worries. This is just a very quick summary of what I just mentioned and what it really impacts the business. So this was before the 20% drop-off was implemented. The total operating profit was 600,000. So the verification cost of 400,000 and the total revenue of $1 million, it comes to a 600,000 operating profit. But once we implement the 20% drop-off, which realistically speaking always happens, for example, in this case study, the operating profit drops to 400,000. So as you can see in comparison, the customers that was actually onboarded was reduced to 80,000. The total cost assumingly is the same because you still have to pay for the verifications, even for lost customers. For the total revenue, after drop-off, you have a reduction of 200,000 operating profit, and your customer acquisition cost essentially increased by 25%, which is $2.50. So all in all, the opportunity cost for your business, what this meant, what the 20% drop-off rate meant, was a reduction of $200,000 that could have gone into your bank account. It could have been reinvested into the business, generating even more growth for your business. It could have been used in so many different ways, but due to this drop-off, it affected your business profitability. And on this note, I do want to share very quickly. TrustOut, we are actually developing kind of like a calculator for you to calculate how much the drop-off rate actually affects your business. So for example, I keyed in all these key points, the same figures as earlier, $100,000 and $2 cost per verification, 20% drop-off rate. And assuming the average revenue per customer is $10, you will see how it affects your business. So for example, the amount of revenue lost to drop-offs is about $200,000. And the number, we should mention 20% is 20,000 lost users. So I just want to share that this calculator itself is almost going to be launched. Everyone here in this webinar today is actually the first to actually see this. And, it's kind of like a sneak preview for on here. And we will be more than happy, to share it as soon as it's live. Actually, it's coming out in just a few days, but you are the first ones to actually get the sneak preview for this. So we really hope that, you could utilize this to help your business. It just takes only a quick 1 minute for you to key in the numbers and make sense of the numbers on your own. So of course, we do add in, a little element of how we help to address our customers and help them recover those or prevent the drop-off rates and essentially increasing their net revenue gain. But that's a conversation for another day. Yeah. So coming back to our slides here, we have mentioned already about, how $200,000 could have gone to your bank account. But the question is, how do I improve the process and how do I recover that amount? So we already talked about the operational complexity of this, of how to make it better. But very simply, just to summarize, focus on drop off and conversion rates to realize that 20% operating profit. Whether you should do it in-house or outsource, that's entirely up to you. We already shared some things to consider about that operationally. But just to be clear, by delegating somebody to do the heavy lifting for the eKYC section and focusing on the drop-offs and conversion rates for you, you don't need to change, how you're attracting customers or monetizing customers. Just get someone to focus on the conversion rates. It will allow you to focus on the important parts of the business, which is really driving the registrations, getting people onboarded onto your platform, funding and using your platform, or just generally using your services altogether. You really want to utilize eKYC to work for you, to lower your costs and increase the revenue. So with that, we have actually come to the end of our sharing today. And just to end off, ABC, this is a quote from us here at Trust Talk. ABC, it usually means always be closing, right? But in our context, we want you to always be converting. Never allow for drop off in your business. Always be converting them. And we are really, really happy that you joined us here today. Here's a demo for how we do it at Trust Talk and our eKYC process. We try to make it as seamless as possible for our customers and clients. If you'd like to try it out for yourselves, please feel free to. The whole process only takes 30 seconds to complete. Maybe from this demo, you could actually also figure out ways to improve your own KYC process. And if you'd like to have a conversation with us, of how we can help or advise you, we're definitely more than happy to. My email is below. Please feel free to drop me an email anytime, ping me anytime. And if you enjoyed today's webinar, please do like our Trust Talk LinkedIn page. We'll be doing a lot more webinars in 2023. And if you find it helpful, we are more than happy to share from our experience. So I see some questions coming in. Thank you very much. Which countries or markets do you offer services in? So, okay, for Trust Talk, we do basically global eKYC, hence, we're a global team. Right now, in terms of the nationalities that we do KYC for, it is pretty much global. We can KYC people from any nationality based on the database that we have. So, however, it is still important for us to understand what markets or countries you are focused in for us to customize our solutions for you. Yeah, that's what we really want to focus in. But rest assured, yeah, nationally, in terms of nationalities, we can cover the world. Yep. So really hope that it was a very insightful session for you guys. Hope that it was really helpful. And yeah, my contact details are here. I'm extremely responsive. Really, please feel free to drop me. If you think up of any questions later on, just drop me an email. I'm more than happy to entertain. Yeah. Really have a good rest of the week. Have a good one, guys. See you.